Investing can be one of the most powerful tools to build long-term wealth. But only if you do it the right way. The truth is, most beginners make the exact same mistakes. Some of them small, others extremely costly. And the worst part? Many of them can be completely avoided if you just know what to watch out for. So in today's video, we're taking a deep dive into the top 10 beginner investing mistakes, what they are, why they happen, and what you should do instead. Let's get started. Investing without a clear goal. Asterisk, one of the biggest mistakes beginners make is starting to invest without any direction. They throw money into random apps, random funds, or random stocks, but they don't know what they're actually trying to achieve. Are you building wealth for retirement? Saving for a house? Growing money for your kids? Or do you simply want to beat inflation? Your goal defines your timeline, and your timeline defines your strategy. When you don't know your purpose, every market dip feels dangerous, and you end up reacting emotionally. A clear goal gives you confidence, structure, and patience. Trying to get rich fast. Another extremely common mistake is focusing on speed, not sustainability. People start investing because they saw someone on TikTok double their money in 2 months, or someone made a killing with crypto 3 years ago, and suddenly they think investing is a shortcut to becoming rich. Here's a reality check. Fast money usually comes with fast losses. The foundation of real investing is simple: time plus consistency equals long-term wealth. The sooner beginners accept this, the less damage they will do to their portfolio. Investing money they can't afford to lose in the short term. One of the most painful mistakes is investing money you'll need soon. Maybe it's for rent, a car, a vacation, or an emergency. Markets can go down 10%, 20%, even 40% in the short term, and if you need that money, you'll be forced to sell at the worst possible moment. Before you invest anything, you should build an emergency fund, 3 to 6 months of living expenses. Only then invest money you won't need for years. This single habit protects you from panic and poor decisions. Poor diversification. Asterisk, diversification is one of the few free lunches in investing. And beginners tend to get it completely wrong. Some put all their money into a single stock, maybe a company they like or one they heard about online. Others do the total opposite. They buy a bunch of funds and end up owning the same thing multiple times. True diversification means spreading your money across different sectors, industries, and regions. For most beginners, a simple broad ETF, like a global index, is more than enough. It's easy, cheap, and historically very effective. Trying to time the market. Asterisk, here's a mistake even experienced investors struggle with. Trying to buy at the perfect moment and sell at the perfect moment. But the truth is, almost nobody can do this consistently. Not professionals, not analysts, not even people with decades of experience. Timing the market usually leads to hesitation, missed opportunities, and emotional investing. The alternative? A strategy called dollar cost averaging, investing a fixed amount on a regular schedule. This removes guesswork, stress, and emotion from the equation. And over time, it often beats trying to get the perfect price. Not understanding risk and volatility. Many beginners expect their investments to grow smoothly every single year. They're shocked when the market drops even a little. But volatility is completely normal. In fact, it's a part of the game. It's the price you pay for growth. Markets have good years, bad years, and sometimes horrible years. But historically, over long periods, 10, 20, 30 years, the trend has always been upward. When you understand risk, market dips stop feeling like danger, and start looking like opportunities. Buying investments they don't understand. This is one of the most dangerous mistakes. Beginners see something that sounds exciting: options, CFDs, leveraged ETFs, crypto coins, complex insurance products, and they buy without understanding how it actually works. If you don't understand how something makes money, how it loses money, and what risks it carries, you shouldn't be investing in it. Investing should feel boring. If it feels like gambling, chances are, it is. Ignoring fees. Asterisk, fees might seem small, 1%, 2%, but over decades, they can eat away a massive portion of your returns. High-fee mutual funds, expensive active management, hidden costs. Beginners often don't notice them until it's too late. When choosing ETFs or funds, always check the TER, total expense ratio. The lower the number, the more money stays in your pocket. In long-term investing, controlling fees is just as important as choosing the right investment. Emotional investing, fear and FOMO. Asterisk. This might be the most universal mistake of all. People let emotions drive their decisions. When markets fall, they panic and sell. When markets rise, they fear missing out and buy at the top. Fear and greed, the two oldest enemies of investors. Successful investors don't react emotionally. They follow a plan, they stick to their timeline, and they know that short-term noise doesn't change long-term strategy. Not having a simple strategy or review system. Asterisk, the final mistake is going in without a plan. Buying random things on different platforms, with different goals, at different times, and hoping it will work out. A good investing strategy doesn't have to be complicated. In fact, simple often works best. For beginners, a strong strategy might look like this. Choose 1 to 3 diversified ETFs. Invest regularly every month. Rebalance once a year. Ignore market noise. Stay consistent. This alone is enough to build serious long-term wealth. So those are the top 10 investing mistakes beginners make, and more importantly, how to avoid them. If you understand these pitfalls, you're already ahead of the majority of new investors. Remember, investing isn't about luck. It's about patience, discipline, and knowing what you're doing. Thanks for watching, and if you'd like a follow-up video on building a simple beginner-friendly portfolio or choosing ETFs, just let me know. See you in the next one.